The Bank of Canada left our key policy rate unchanged at 1.25% as expected, but going forward, they anticipate the economy will grow at a faster pace. Joining us to explain is Michael Craig from TD Asset Management. Thanks for being here.
Thanks for having me.
Going into the statement, Mike, we thought it was going to be a pretty cautious tone, and we heard the same thing this morning, but how did you read the statement?
Well, the bank was certainly in the middle of the road on their statement. There was nothing too hawkish to read from it. I think ultimately the market took it as a slightly dovish. Bonds rallied somewhat and the Canadian dollar weakened modestly after the statement.
You mentioned the Loonie, and we saw it a bit weaker. What's your call on it going forward?
Well, we think that Loonie is going to weaken over the next 9 months or so. We think there's a lot of headwinds facing the Canadian economy, and it's sometimes a tug of war between what's going on in the U.S. and what's going on in Canada. When you look at the Loonie across a basket of currencies, though, it has been a fairly weak performer this year, particularly against the euro and the sterling.
On some of those key headlines that you're watching, you highlighted there's 4 things, 3 hawkish, 1 dovish. What can you tell us about that?
Yeah, so the bank's looking at various things that could sway their view of the economy. They do point a risk that the U.S. could grow faster than expected based on tax cuts, so that would lead to more hawkish policy from BoC. But predominantly the risks are tilted to the downside. They're worried about housing prices rolling over. They're worried about Canada becoming less attractive place to invest because of U.S. tax policy and our current policy. And also looking at issues with an acceleration in household debt again. So things that they're watching for and things that we look at to see if it will change the way the bank's thinking about the progression of the economy.
And one of the things your team does is you really look at this from a portfolio management or an asset allocation standpoint. How would you play the market based on what we've heard today?
Well, we still think the biggest story in Canada is the imbalances, and that is the overall reliance on household debt and an elevated property sector. We see a similar story in Australia and can kind of look at how the two economies have performed. And the big takeaway is that from an investment standpoint, it still makes sense to have an overweight or a higher allocation to foreign equities, be it the US, Europe, or Asia, versus domestic economies, as we feel that those jurisdictions will grow faster than Canada in the years to come.
Mike, thanks very much for being here.
Thank you very much for having me.